Welcome to the Policy Bazaar show, our special show bringing you the latest updates related to insurance. I'm Chaiti Narula. Breadwinners of a family are often advised to invest in life insurance because of their loved ones depending on their income. But what about their better halves who do their part staying at home, the homemakers? The value added by a homemaker to a family is monumental, as we already know. Last year, the Supreme Court of India recognized the problematic conception that housemakers do not work must be overcome. The court added that the economic significance of homemakers' unpaid domestic chores may not be undermined. It was necessary that this long overdue change should extend to the life insurance industry as well. This brings us to the topic of today's show, ensuring financial inclusion with term insurance for homemakers. Joining me to discuss this, we've got Policy Bazaar show veteran Santosh Agarwal, the ever so charming Chief Business Officer, Life Insurance at policybazaar.com. Santosh has joined policybazaar.com in 2011 as an Assistant Manager, Business Development. Today, under her leadership, the life insurance vertical has witnessed a major transformation in terms of market share and product innovation. Her performance has been remarkable, particularly in driving the term insurance business. Pleasure having you with us as always, Santosh.
Thank you so much, Ed.
And joining Santosh today is Aditya Satpute, Corporate Vice President, E-commerce and Digital Marketing, Max Life Insurance. Aditya has over 15 years of experience in delivering world-class, growth-centric and new-age digital solutions. At Max Life Insurance, he's responsible for leading the digital transformation journeys of one of India's largest life insurance organizations. Aditya, in his current role, focuses on strengthening emerging ecosystem partnerships, consolidating the online business franchise, and empaneling marquee partners. Welcome to the show, Aditya. What a pleasure to be doing this show for the first time with you.
Thank you so much. Pleasure being here.
And look forward to many more together, Aditya. But let's start today's discussion. Santosh, over to you first. The Supreme Court's judgment last year strongly reiterated that the notion of homemakers not contributing to the economy is problematic and must be overcome. On these lines, how do you see the launch of an independent term insurance plan for homemakers? Is this a positive step towards Atmanirbhar Bharat? And how is this different from the existing insurance policies available for homemakers?
This is a very positive and a very progressive step. I think it was long overdue. The fact that homemakers do generate income and what they do at home is incredible, not just from an emotional supportive standpoint, but also from a financial standpoint. That I think is a welcome move. And it's great that the life insurance industry has been very forthcoming in welcoming this change and have actioned this into an actual product for homemakers. It's a big change in the industry. Max Life has taken the first lead in bringing out this product, and I'm sure the rest of the industry will follow.
Aditya, homemakers are an integral part of the economy and they should be able to offer life insurance independently. And this brings us to the question that how would one ascertain the monetary value of their contribution in terms of premium or sum assured? It's very difficult to come to that sum, right?
So the answer to this question actually lies in the landmark ruling by the Honorable Supreme Court that actually adjudged that the value of a woman's work at home is no less than her office-going husband. A very progressive statement that actually says that the woman at home is as important socially as monetarily. And what this is actually doing is getting the woman back in the fore and saying that she just not only adds to the economic situation for the family, but also for the country. Now, there is no specific method that is available today in the judiciary to tell us exactly how do you ascribe the monetary value and accordingly ascertain the sum assured. But there are different proxies available. So one could be opportunity value, which is what if the woman was not at home and was working, and how much would she actually earn? Second is replacement cost. What it means is that if we had to replace the work that a homemaker does at home by an outside help, how much would you end up paying her? Or third is partnership method, which means that if the husband is earning X, the wife at home should at least earn half of that. Now, there are different methods that the judiciary is ascribed. One method is multiplier method, and they assume that the amount of money that the woman should actually be ascribed is rupees 1,000 a month. It was updated to 3,000 a month. The Motor Accident Claim Tribunal in Maharashtra in last year actually ascribed 5,000 rupee a month to actually compensate for a road accident of a deceased housewife. So to that extent, I think this is an emerging field, and there is no specific method, but there are different proxies that you can actually use to ascertain the monetary worth and accordingly adjudge what should be the sum assured that the woman at home should be able to garner.
Santosh, can you elaborate on the features of this plan, and do you see it as a starting point to bridge the protection gap, especially for women consumers in India?
Absolutely. This should make protection a common household name. Homemakers, given that they take care of the family, their lives need to be protected. And the fact that they now can buy a term plan which can ensure protection to the entire family if something were to happen to the homemaker will go a long way in driving the protection agenda. The fact that today a homemaker can buy up to 50 lakh of sum assured, which is, I think, a starting point, but is a decent cover for somebody to at least start with. And the product that Max Life today is offering is a 50 lakh sum assured cover. It's a basic protection product where you pay premiums every month or every year for an amount, for a period of time. And if something were to happen to you, the 50 lakh cover will be given to your family, and the family's lives can carry on with that pot of money. The importance of protection is the fact that for a large cover like 50 lakh, the amount of premiums that you pay on a monthly basis will just be, about 500-600 rupees, which will not pinch your pocket at all. But if something unforeseen were to happen, the 50 lakh can really change the lives of your, family, and hopefully from a financial impact, nothing should happen to them. So it's important that we understand why protection is important. And this is a great product from Max Life because it also has a very interesting feature that if once you start paying your premiums and, at the age of 65, once you've retired, once your children are no longer, they're not dependent on you, if you decide that the term cover now is no longer relevant, you can stop the cover and you can recover all your premiums. So all the premiums that you have paid will come back to you. So in a way, it becomes a free of cost product that you keep till you retire, till you really need it. And once you stop, maybe at the age of 65, all the premiums come back to you. So I think it's a very exciting plan and a beautiful product. Now it's available for homemakers. So I think it's a very good step that Max Life has taken, and hopefully the rest of the industry will join.
Aditya, could you tell us more about how this plan aims to cast a wider safety net and provide coverage to the country's underserved sector in Tier 2 and Tier 3 cities as well?
So I'll tell you the earlier product. Okay, so only a few companies were actually making life insurance available to housewives. And they had two main conditions. Number one, that the husband needs to have an insurance policy with that particular insurance company. And the minimum income of the husband has to be 10 lakhs. So what we did in this particular opportunity through a product that we offer called Max Life Smart Secure Plus Plan, we replaced the need of the husband to have a policy with us, which means that the wife can come and buy a policy directly with us. Item number one. Item two, what we did was we removed the need of the husband to have 10 lakhs of income. We've reduced the family income to 5 lakhs. Number three, we can take any income surrogate. It could be the wife's savings account details. It could be the savings account statement. It could be the SIPs that she probably would be running. It could be any other proxy that can give us an assessment of the family income to be about 5 lakhs. And number four, we have allowed the range of age 18 to age 50 as the overall range that a homemaker can apply. What this has suddenly done is actually opened a wide net for all the homemakers to apply, especially Tier 2 and Tier 3 cities who were otherwise outside of the ambit of the homemaker insurance policy.
Aditya, while it's commendable that the dependence on spouse's policy or income has been eliminated, what income criteria should the buyer meet in order to opt for this particular plan?
So as I said, the husband's income, which was 10 lakhs, is now brought down to family income of 5 lakhs. And the way you can assess it is through multiple proofs. You can show us your husband's ITR, his income proofs in the form of salary slips, or you could simply show savings account details, investment portfolio, SIP, credit card statement, home loan statement, and help us assess the family income of 5 lakhs, and that should be sufficient.
Santosh, apart from this overall term insurance buyer perspective, can you please guide our viewers on what kind of cover amount would ensure adequate coverage for which age group?
See, ideally, the rule of thumb is that whatever your income is, and depending on your age, your sum assured or the cover is a multiple of your income. If you're in the age bracket of, say, 20 to say 35, you should take 25 times your income. If you're in the age group of 35 to 45, 15 times is good enough. And beyond 45 years of age, 10 times of your income is good enough. Now, this is the rule for the breadwinner who's directly generating income. The homemaker can take half that amount. So I'll just clear this with an example. If you are, say, 40 years of age, and if you earn, say, 10 lakh worth income, you should buy 1.5 crores of cover, and the homemaker should buy 75 lakh. So that's the very basic rule of thumb. Obviously, there are nuances to this. So if you have a home loan, you should include that in the cover amount, and your cover amount should be more than this basic principle. But again, even if you follow this basic rule of thumb, you will have a basic cover to protect yourself.
Right. So it's time for a very short commercial break here on India Today. Stay tuned. We're going to be right back on the Policy Bazaar show. Welcome back to the Policy Bazaar show. We're discussing ensuring financial inclusion with the term insurance for homemakers. Here with Santosh Agarwal, Chief Business Officer, Policy Bazaar, and Aditya Satpute, Corporate Vice President, E-Commerce and Digital Marketing, Max Life Insurance. Let's continue our discussion. Aditya, though this is a pretty recent launch, could you still tell us a little about what kind of response are you seeing so far? How have people warmed up to this plan?
So I can tell you that the initial response has been phenomenal, and we've garnered great responses from customers through this particular campaign that we've launched along with Policy Bazaar. While we are still asserting the size and scale of the opportunity, I can tell you that if the size is 100, we've just moved from 0 to 1 and barely scratched the surface. We still have a long journey from 1 to 100 to actually take advantage of the wide ambit of the homemaker insurance policy that we would like to take advantage of in the years to come.
And well, thank you, Aditya, for responding to that query as well. I'd like to take the same question now to Santosh. Santosh, you tell us also, what is the broader message that you would like to give our viewers on how this step ensures better financial inclusion in India and brings about the right kind of change for the better in the mindset of the people?
It's a great move from the industry. All homemakers should understand that protection is important, and one should have a health cover and a life cover. A pure protection term insurance is important. You hardly pay 500-600 rupees a month, but you can get a large cover of up to 50 lakh, which can be very, very relevant if something were to happen to you. So don't miss this opportunity, and please start on the protection path today.
Pose to you another question. What is the broader message that you would like to give to our audience, Aditya, on how this step ensures better financial inclusion in India and bring about a positive change in the mindset of people as well?
A woman's contribution as a homemaker is essential and irreplaceable. They take care of the family's well-being, offer emotional support, and ensure financial balance of the household. Through this offering for homemakers, we're taking the first step towards empowering Indian women and enabling greater financial inclusion by protecting them in these challenging times. We are confident that this crucial endeavor will help us improve protection penetration to this underserved market and accelerate financial growth for the homemakers.
With this, we come to the end of an insightful discussion. Thank you, Aditya and Santosh Agarwal, for joining us today. It was a pleasure having you both on the show. That's all for this week. Keep watching the Policy Bazaar show.